Welcome to the Market Musings podcast, where today we go to Toronto and welcome Konrad Kopacz, a partner and portfolio manager of Canadian-based wealth management and capital markets advisor company Echelon Wealth Partners. Hello, Konrad.
How's it going?
Good, thank you. How are you?
Can't complain.
Good. Hi, Kenny.
Yep. How are we getting on, Konrad?
Good.
Yeah, it's really good to have you on, and I appreciate it's pretty early in Toronto at the moment. Is it at 10 a.m. in the morning?
That's right, but the markets start at 9:30, and we start even earlier.
Even earlier, yeah. And what's life like in Toronto at the moment with the COVID situation? Is it calming down, or?
I think we actually handled it very well. I mean, the fact that we closed the borders pretty early on. And Canadians are pretty responsible as it is. People are taking it very seriously. So I would say the toll has been less so than in some countries, especially our brothers and sisters in the South and America. But it's still here, and people are still taking it seriously. We're on to stage 3, where we're reopening up restaurants, indoors and so on. But there's some people that are relaxing it because it's summertime, but there's still plenty of people that are very cautious.
Yeah. Well, they're probably the same in the UK. I mean, some places are open back up, but there's a lot of localized lockdowns. In fact, in Scotland today, they actually locked down Aberdeen, which is a city in the north. Which is a first for us since the whole country was locked down. So there's still some pockets going about. So hopefully we're over the worst of it. But as I said, Konrad, it's great to have you on, and we always like to talk about people on our podcasts, and we want to know, not just what you're doing now. Obviously, you're a portfolio manager at the moment, but we'd like to sort of go back in your history and tell us what you've done in your career, and go back as far as you want, education or childhood, etc. It's really up to you where you want to start, Konrad.
Well, I would say that, I learned about money pretty early on. My dad taught me about being a landlord and, how cash flow is very important. And from there, I took finance in school, and right off the bat, I got into trading pretty early on for one of the major Canadian banks. I went to derivative sales after that, and then 2008 happened, and basically, I would say North American operations got laid off about 80%. Went into prop trading, thinking that there's plenty of volatility in the market, so I did that for a little bit, and I got presented with an opportunity to become a manager at a mutual fund dealer, looking over, a couple hundred advisors, which was a great experience because it kind of opened my eyes to advice to the retail public. And from there, I kind of realized that, through my experiences, I actually had more experience in the markets than a lot of the advisors out there. Yep. So that drew me in to become an advisor while I was head of business development at a wealth management firm in Toronto. And from there, it's kind of history. I just progressed in that area, kind of learned what clients are really looking for. And every client is different. So some people love speculative investments, but most of the public really they worked hard for their investments, and they want to kind of protect it. So we've kind of catered to both, but I would say the latter is more prevalent in our practice right now.
And what is prop trading?
So you're using firms' capital to make trading bets essentially on the market. So you can use arbitrage, where you're just trying to take pennies here and there, basis points, and or you can be a momentum trader, where you see short-term momentums in a price that might correlate with certain other assets, and you take advantage of that. But it's basically you're trading, 10, 100, maybe even 1,000 times in a day, and depending on the strategy, and trying to make money off for yourself and the firm.
Okay. Is that not quite a stressful situation to be in?
Yes, I mean, I can't say all my monitors survived during that process, but it was definitely an experience. But I actually love what I do now, because as a portfolio manager, I kind of dictate how I want to invest for myself and for my clients. And I'm more of a long-term investor. Not even though I might invest in some speculative areas, I'm actually a long-term investor. So I kind of look at everything, and I think of it as Warren Buffett says, "Why would you buy something if the markets if they shut down for 5 years? Why would you buy something if you wouldn't want to hold it for those 5 years?" So I kind of look at that. That doesn't mean I hold everything for 5 years and above, but I kind of look at that when it comes to every investment decision I make.
Yeah, and he's been quite successful over the years, so he has. No, definitely.
Yeah, no, he definitely has been.
Yeah.
So how are you finding the market at the moment then, Konrad?
Well, I would say that I'm lucky that, we didn't panic. We made some changes at the beginning, but overall, the market right now, I think too many people are just, they're seeing the index go up, but they don't realize it's mostly, large tech, healthcare, and obviously now gold that is kind of driving things. But there's a lot of companies out there that are still 10 to 20% below their, February highs. So I would say that we're very cautious, but we're not scared. If that makes sense. We're willing to put capital to work, but we don't want to participate in FOMO, fear of missing out. But we're also aware of, the challenges that we're facing. And, it could be 1 to 3 years of this, higher unemployment, what kind of impacts that will have to the greater economy, locally and globally. So these are the kind of things that we look at. So we've definitely focused on growth, and we were lucky enough to invest in large tech prior to this. So our portfolios actually worked out pretty well, but I would say that I wouldn't be just, for lack of a better phrase, like a Robin Hood trader and just going extremely aggressive and buying just anything that could move. I would definitely be looking at a long-term aspect of investing, even right now.
Yeah, it's quite interesting that you mentioned tech there, Konrad, because obviously the last cycle, some of the biggest tech companies around now were born out of the last downturn. So my own perspective is I think tech will do extremely well out of this COVID situation, because everybody's going to have to live their lives differently, and the way that's going to happen is through new tech. So is that something that your company specifically targets in general, not just during the COVID crisis?
Our company kind of targets more mid-cap sort of opportunities. But as a portfolio manager, myself along with my partner, we have carte blanche when it comes to investing any way we want to. Our capital markets is obviously more mid-cap focused, some small cap, but more mid-cap now. But when it comes to tech, we all seen what happened with the tech bubble, so we can't also get ahead of ourselves. But, after speaking with a few other portfolio managers in our industry, basically all the trends that were happening prior to COVID have just now been accelerated.
Yeah.
So that's what we're seeing, is just the acceleration of current trends. And I mean, things that I'm going to be looking out at is, commercial real estate is now that if people can work from home, our companies are going to need as much commercial real estate.
Yeah, it's a good point.
I even look at the residential, real estate market. Is, do people want to live in shoeboxes downtown because they're close to work? If they don't have to travel, are they going to be moving outside the city? Is that going to affect other things? So I don't just look at tech stocks. I look at a complete picture of how all of these pieces are going to impact each other and where the opportunities and potential pitfalls may lie.
Definitely, yeah, some good points here, Konrad. So obviously now we're into maybe month 3 or 4 of COVID. Would you have done anything different? If you could go back to right at the beginning of the outbreak, would you have done any, a different investment strategy? Or
hindsight is it's pretty funny because you could always say a few things, but while you're in it, it's a different story. We had a little bit of small caps that, when we first heard of COVID, maybe trimming those positions off a little bit more than what we did might have been wise. Now they're back because, we were still investing them in a fundamental reason for it. But what happens is when there's a crisis, liquidity dries up.
Yeah.
And if we're large shareholders of a small cap, we don't have that exit, even if it's temporary, even to just trim for volatility or to make use of cash for other opportunities, that just dries away. So I would say that trimming from small caps when we first heard of COVID, that probably would have been wiser. But we were getting so much misinformation out there that's what made it very difficult. Is you first hear it, then you're like, okay, well, sounds like China's containing it. The World Health Organization is making other claims. But by the time the U.S. closes its borders, it's already you're already kind of dealing with the current situation. Luckily for us, we're big private equity, private debt, and venture capital guys. That we didn't feel the same volatility. So because it's not priced on a daily basis, our portfolios actually maintained a very strong return compared to, I guess, even a balanced portfolio. With the market falling, 35% from its high very quickly. So because of our alternative sleeve, it actually gave us more breathing room to really assess what is happening. And so we took advantage of a few opportunities that have paid out. Energy took a bit of a beating, and there was the ability to buy in at discounts. Like, I've never seen oil go negative in the futures before. So that was an opportunity.
Yep.
And then obviously now how gold is becoming an opportunity. Funny enough, it's when everything fell right all at the same time. Even mining stocks just absolutely got hit super hard. So that created an opportunity. Only after the first couple of weeks, then you start seeing royalty companies start moving a little bit. And then, so it started with royalties, then large caps, mid caps. Now the juniors are starting to move. But I would say if we got a little bit more into in gold a little bit earlier on, that also would be more beneficial at this time.
Yeah, I must admit, it's junior explorers that I tend to invest in. And the last 2 or 3 weeks, some of the performance of these small stocks has been fantastic. You mentioned gold there just a couple of minutes ago. Obviously, it's moved over sort of $2,000 in the last couple of days. What's your own personal view about gold? Where do you think it's going to go?
Well, I've been an investor in gold for the last 8 years, just buying things penny on the dollar in the private markets. Now things are kind of moving. And I would say that I didn't know what the catalyst was going to be for gold prices to just start ramping up drastically. So, I mean, with every crisis, there's opportunity. And obviously, as sad as the pandemic has been, it actually provided a lot of opportunities for gold because of just printing money.
Yeah.
So my personal view is with low interest rates, even negative rates in some countries, and more countries probably joining in on that fun of negative interest rates eventually, and with continuous money supply being increased, that should do well for commodities in general, not just gold, just hard assets in general. And we'll see what happens with gold. I mean, I don't like ever seeing anything go parabolic. So that's gold. Like, even though you might like Tesla, it's gone parabolic. So no one could really assess the price of Tesla right now, if you like it or if you don't like it, because it went parabolic. So I kind of want gold to stabilize. And if it stabilizes at these high levels, that's when larger companies can start investing in CapEx, start buying some assets, replenishing their current assets. So for juniors, for them flying, that might be a great trade. But from an investment standpoint, I need price stabilization.
Yeah. Yeah, well, I think there's a bit of fear of missing out going on with the gold at the moment. It seems, I'm pretty active on Twitter, and there's a lot of talk about that going on. And any of the interviews that you see from North America, there's some wild price predictions, $3,000, $5,000, $10,000 an ounce, which sounds a bit crazy. But if you actually look back to the 1980s, the early 80s, when the gold price it's spiked extremely high. I think the equivalent price is probably about $10,000 today. So I get where these guys are coming from, but it just seems ridiculous that it would get there. But who knows? We live in strange times now, so anything is possible, and I'm not going to discount it.
Well, I feel like I look at it objectively because I'm more of a generalist than specific on gold. So as much as I hear and listen to the advice from various individuals that specialize in resources, I create my own hypothesis of what could happen along with my partner and other key staff members. And, though we think, again, because of the money printing, it will do well, but it's FOMO, just with like big tech right now. It's potentially FOMO. That doesn't mean it can't go higher. It's just tougher to invest properly when things are just moving too fast.
Yeah, you need that bit of stabilization, don't you? So you can get some breathing space and as you say, make the investment. But we've not really. Sorry, Mark, I'll let you come in.
Well, were you going to move off gold, Kenny? I thought I'd just ask a question on gold.
Yeah, on you go. Yeah, ask a question. You go.
Yeah, so I think you mentioned earlier, Konrad, that in your opinion, the virus has accelerated what was already a trend, and has also been the catalyst for what gold is doing now. So in your opinion, then, do you think that gold was on a sort of an upward trend, and perhaps an upward trend in the mining sector prior to this virus? Or do you think this virus is a thing it's just a rush to a safe haven?
I mean, I could say both, truthfully. But when it comes to gold, gold really is about money preservation. When you think about it, it's not about trying to get rich on speculation, though some people are doing that, but it's about money preservation. And when I would say government bonds are doing hardly any yield or negative yield, I mean, how do you protect, your own capital? You put it to safe havens, right? So I would say that a large demand in actual fundamental gold prices is just protecting your buying power. But so I would say that prior to COVID, the market was also rallying pretty hard. And, people say this is one of the most hated bull markets in history, even though it was one of the longest. But, as things are getting long in the tooth, people were probably looking at these safe haven assets like, you know what, it's getting long in the tooth. I'm going to take some profits off the table and I'm going to buy some gold. I mean, that's probably what was happening. And then this kind of just accelerated that whole thought process. So I honestly think that gold right now is a safe haven. I know cryptocurrencies is now I would say the flavor of the month, if not a few years, for the younger generations. And I believe in the blockchain technology. I just don't know how many of those things are going to survive. Exactly. But when you look at gold and silver, I mean, it's already survived the test of time. So, I mean, even if you don't like holding on to a metal that doesn't provide a dividend, which is one of Warren Buffett's biggest issues with owning gold, but as a protection of assets, I mean, do you go with something that is survive the test of time, or something that is still speculative in nature, even though you might say blockchain is the wave of the future? Are you going to bet which one is going to survive? I don't know. I mean, obviously, Bitcoin is now kind of the gold standard of cryptocurrencies. So you might say that one has the best chance, but it's still not sure. I just actually was looking at Twitter and I just saw a post there where one of the exchanges was offering $400 million reward for 1.2 billion in Bitcoin being stolen in 2016. And I don't think it's the same problem that gold would face. Like, no one's going to be just stealing my shares in that company or the physical gold. So again, cryptocurrencies is still facing the wild west, while gold is a little bit past that.
I suppose one advantage of cryptocurrencies I've got. I suppose it's not an advantage because gold's the same, but there's an awful lot of liquidity in the cryptocurrencies, so it certainly allows a lot more trading. And if there is a crisis, a lot of people will use crypto to liquidate some funds. But it's certainly on a tear. I mean, I've got some Bitcoin and I've got some XRP as well. That's only two I hold at the moment. But I'm just dabbling. I'm not really went full at it yet. I don't really understand it. And as much as we've had many crypto guys on our podcasts, I'm still trying to get my head around it at the moment. There's so many coins out there. So there is. It's a bit of a minefield.
I mean, I would say some conspiracy theorists say that, this pandemic was created by certain, elites to eliminate cash so they could control the world. I mean, if that was the case, and I do think that blockchain is going to matter, but why won't every government just create their own blockchain and then all of a sudden make it illegal to use third-party blockchain and put jail sentences on these things, or huge penalties if they don't want to control everything. So that's why I'm still worried about this whole cryptocurrency thing, just because governments really haven't put their huge stamp on it.
Yeah.
And until then, I don't know, like Bitcoin could go up to $100,000 US dollars, but then all of a sudden the US says, no, we want to collect taxes. We actually want to control everything. Anybody that uses Bitcoin as a method of payment inside the US is now will serve 1 year in jail, $10 million fine if you're caught as a vendor or as a purchaser. That party ends almost immediately, even though the technology still exists. So I don't know. Like I have a little bit, just like yourself, just have a little bit of Bitcoin, but I'm not sold yet. No, that doesn't mean I'm right. That doesn't mean I'm wrong.
Mm-hmm.
I just don't know it. There's just too many factors. And like with gold, I know people could say, when the U.S. confiscated gold at a set price, I can't remember if it was the 1920s or 1930s, but anything can happen. But I just kind of have a little bit more certainty on what's going on. When investing in gold, I make sure I know who I'm partnering with, who's running it. Does the company actually just spend a lot of money, basically burning money, while they could be preserving it and actually putting it into the ground and using it effectively? Mm-hmm. So I just have a little bit more control over the things I look at when it comes to making investment decisions.
Yeah, just that leads me on nicely when you're talking about investment decisions, Konrad, to obviously Echelon Partners. We've not really spoke much about them. Could you give us a brief overview of the company, how long it's been going for, what you guys do, and what your role is within the company?
Yeah, I mean, Echelon Wealth Partners actually started at Euro-Pacific Canada. So it actually was more resource focused. Peter Schiff owns Euro-Pacific in the US. Mm-hmm. So there was some relations with Peter Schiff. I mean, he still owns a little bit of Echelon Wealth Partners, I believe. But we had an opportunity to actually buy a larger dealer than ourselves. So when I came in, we were managing about just under 700 million as Europac, so Euro Pacific. Mm-hmm. And then we were able to buy Dundee Goodman Private Wealth, which is about 3 billion at that time. And right now we manage about 6 billion in assets. We specifically cater to a vast array of industries, but again, it was small cap at the beginning. Now it's more mid cap, and we're getting more into private because we've actually hired 2 gentlemen to run our capital markets division that specialize in private debt in the mid markets side. So we're kind of getting more and more into that realm. So it's a great company. It's all the portfolio managers that work here and investment advisors. They're truly independent. No one tells them how they should run their practice. Obviously, there's a great management team that try and helps people that want help. But it's a good set of people that work here, and pretty satisfied with the growth and the continued growth and where we are today. So that's basically Echelon in a nutshell.
Yeah. And what is it you do within the company? What's your exact role, Konrad?
So I'm a partner, which is a part owner of the company. I'm actually a portfolio manager / investment advisor. So we basically run portfolios for retail clients and a few institutional clients. So we specialize mostly in, I would say, protection of assets. So that's why we do a lot of private debt, private equity, just alternatives in general. We do have currently we have a nice allocation to real estate as well, because it has worked for 20 years in Canada. But we're all constantly reassessing where we want to be. But we always look at a nice diversified portfolio, not just in stocks and bonds, like the traditional 60-40 split that a lot of advisors are still kind of holding on to.
Mm-hmm.
Okay. Now, we spoke, Konrad, before the start of the podcast about the companies that perhaps Echelon look to invest in. I know you can't mention specific companies, but is there anything that you're looking at buying in the current market?
I mean, we obviously look at small to mid-cap silver and gold producers.
Mm-hmm.
We're expanding a little bit more on the commodity cycle to look at, other areas. But that's primarily that we're looking at. But obviously, we don't want to do any sort of FOMO because right now prices have just gone and have become inflated. Echelon, as a partner, really what they look at is helping raise capital for companies that need to expand. So we're not looking at startups per se as a capital market side, but more of established players that are looking at expanding their business either through acquisition or internal growth.
Mm-hmm.
One thing that we were looking at prior to COVID was 5G technology.
Okay, yeah.
So it was all over the news prior, and then COVID happened, and then other things took the headline. So there was a few companies that actually came down in value where they were attractive. So we were able to pick up some 5G specific stocks. So we think that is an opportunity there. And I mean, we always look at still big tech. It's just we want to make sure that we're getting at a decent price. Like for example, though I don't like mentioning specific stocks, like Amazon, it has run quite a bit for obvious reasons. But are we going to chase it? Probably not. But these are the type of companies that we're always going to just look at, and if they get hit with a few bad news and they come to a reasonable price, we may add to something like that. But at this point, it's the big tech that we do like. It's just we have to be very cautious in how we add to positions or add new ones. And then we also look at the things that got hit because of COVID. Not to say that we've invested in tourism type industries, but we look at it and see, which ones might survive, which ones might not, which ones taken too much debt that will affect growth for the future. One thing that you can look at is in 2008 with when the government bailed out a bunch of companies, the companies that took most of the bailout and added debt to their balance sheet had a much harder time growing versus counterparts that didn't take the bailout money. And the results were staggering. So that's something also we look at. So government is writing checks here and there to save industries, but there's some players inside that industry that might have not taken as big of a check, if no check at all, versus its counterparts. So then we would say they have a much higher probability of growing in the future. So we're looking at those aspects too on our short-term trade opportunities.
Yeah.
So even though in long-term, we still look at some short-term opportunities.
Yeah, I imagine going forward, because of the COVID situation as well, Konrad, there's going to be a lot of consolidation in some of these sectors, and survival for the fittest. There's going to be a lot of companies going to the wall. So it'll be interesting. I know a lot of people think COVID, we're on the way out, but the the after effects of COVID might, as you said earlier on, last 2 or 3 years. It might be a while before we're back into a normal cycle, if it ever will be normal again.
I was talking to one of the largest real estate managers in Canada, and they just invest in publicly traded stocks. And they've already contacted all the investment banks, and they said, in 6 months, when you guys are, when those companies are having huge issues and they need to recapitalize, give us a call. Call us first. Because right now, with all the bailouts, with all the rent, for example, being pushed, or in case mortgages for certain properties being pushed 6 months by governments, right now everybody's getting bailed out. Everybody, there's basically have the ability to do a soft landing, but not everybody's going to have that or have that outcome as being successful at doing that soft landing. So there's going to be plenty of opportunities, probably in the next 3 to 6 months. We just can't see it yet. We just, because of all the bailouts in the company. And, we still think there will be continued bailouts, but now they're talking about a $1 trillion bailout, right, in the US.
Yeah.
And then say if the next one needs to happen, well, will it be 1 trillion or will it be 600 billion? Is it just going to continue getting smaller and smaller as we progress? And they're going to leave out certain industries saying, okay, you know what, these guys can fend for themselves now. I don't know. And as new information gets processed, we'll develop new thesis of how we want to invest and maybe take advantage of these markets. But I still think companies that were teetering before, I mean, mind you, there are some bankruptcies in the retail area, but companies that were teetering before that have got a bit of a nice package, I mean, we'll be looking at seeing what companies still need that lifeline but can't get it from the government. Might have to go into the public markets to get that lifeline, and we'll have to give up a lot to get it.
Yeah. No, it's definitely going to be interesting going forward. But have you got any more questions, Mark? So that's a good sort of 45 minutes we've been speaking. So it's quite a good time to probably end it. It's a perfect time.
Yeah, it's a good time. It's interesting you mentioned the 5G. I think that is a good space to be looking at with everything that can be achieved with 5G. And it's particularly interesting, I think, perhaps in the United States and this country, the UK, because we've both banned the biggest tech company in the world, well, maybe not in the world, but Huawei, a huge Chinese tech company, from taking part in any 5G infrastructure. So it's certainly going to delay the rollout of our 5G. I don't know what company, what the government are going to do to change that, but it's definitely worth, I think, keeping an eye on that as a potential for investing in the tech space. It's got a lot of promise.
And companies are going to have to invest in the 5G. I mean, just because I think like SpaceX is launching satellites, Starlink, the company that's going to give globally 4G technology, and it'll be global. And it's not going to need the infrastructure of the existing players for it to be in service. So we think 5G is a great opportunity because companies are going to have to invest just to remain valid.
Yeah.
Good stuff.
Yeah.
So the big question is, Mark, what are you going to do if Donald Trump bans TikTok? I know he's only going to ban it in the US, but what happens if the UK follows suit?
It follows suit. Well, I don't use TikTok. I'm not a user.
He just dances in the mirror. That's all it is.
You've been hacking my camera.
Yeah, good stuff. Well,
but TikTok, I would say, it could be a one-off, or it could be a start of a domino effect. That's why it's a pretty important aspect of what happens there, because China's already banned so many U.S. companies and global companies from there because the privacy reasons and trying to control their population and let Chinese companies grow into these mega companies. So I don't know. There's a lot of things at stake. I just don't know if the change of presidency, if Trump doesn't get elected, what happens there?
Yeah.
Right.
It's a strange. It's almost like an extension of the trade war. So it is between the US and China. It's just added another dimension. So
yeah,
I don't know. I think it would be bad for votes, especially with the younger generation, if he bans TikTok in the US. But listen, I'm not going to get involved with politics. I'm going to.
Well, he wants Microsoft to buy them, and he wants an investment banking fee to go to the US Treasury.
That's right. Yeah.
Funny. Very funny.
Yeah, good stuff. All right, well,
great.
Konrad, it's been great having you on. I appreciate the time, and obviously it's early in the morning in Toronto, and hopefully we can have you on again, because it's interesting chat, and obviously things change over time, so we can maybe revisit some of the stuff we've talked about and see how it's panned out. So, yep.
Sounds great. Thank you for having me. I really appreciate it. And anytime.
Thank you, Perfect. Konrad.
Thanks, Konrad. It's great. Cheers.
Cheers.
Thanks, Ed. Bye-bye. Thank you for listening to another podcast from Market Musings with